Welcome to another stage analysis video. It's Sunday the 12th of February. Got a lot to get through in today's video, so I'm going to start off with a group focus on what's been going on in the home construction group, as they're coming back into focus again this week. It came up a while ago. I did part of the weekend video back in late December, about the 18th, 19th of December. I did a video where I featured the home construction group as it was starting to make the stage 2 breakout attempt here, and had a delve into the group and see what was going on. As you can see, we've had a good move now for the last 8-9 weeks or so, but did get a little bit blown out a couple of weeks ago and pulled back in over the last week. So now going to do a little bit of more of a deep dive back into the group and see where they are, as we've got a number of stocks with earnings coming up in the coming weeks. I think some as early as this week, in the next couple of days. So then later on in the video, I'll get into all of the regular features: stage 2 breakouts, the watch list, the major indexes, market breadth, and industry group relative strength rankings, etc. So, but starting with this home constructions group focus, as I said, we did the feature back in mid to late December when the group made the stage 2 breakout attempt. There are a number of ETFs that cover this group. So this is the Dow Jones US Home Construction Index, which with stock charts, you've got the 104 Dow Jones US industry groups, which cover, and you can obviously go into and see what the individual stocks are within all of those, which is really useful. But obviously, in terms of trading these, whether you're trading individual stocks or whether you're using the ETFs, there are a couple of ETFs that cover the home construction index. So, for example, we have the ITB, which, as you can see, is not too dissimilar to the US home construction index here. You can see that lags a little bit compared to it, because obviously the makeup of it is slightly different. Versus if we look at the XHB, which is lagging even more so. We can see it's only been in stage 2 now for 5 weeks versus the 9 weeks or so that we've been in with the ITB and the actual index itself. So one way you can obviously look at these is you need to look up the ETFs online. So you can go to obviously the pages, look up. So this is the ITB, for example, and as you can see, you can then go down to, you find the holdings, look through the fact sheets, etc. But then find the holdings, look at what their top 10 holdings are, or the entire holdings, and see what the weightings are. So you can see DHI has a 15.75% weighting in this, then Lennar at 13.24, and MVR at 7.81, etc. Versus if we look at the XHB here, the Spider S&P Home Builders ETF, you can see this has a very, very different makeup. You can see there's actually we've got actually different types of stocks in here. So if we go down to the sub industry allocation, you can see actually 46% of the ETF is actually made up of building products stocks, not home building stocks. Only 31% of this ETF is actually made up of the home building stocks. Versus if we go back to the ITB here, we go down to exposure breakdown here, you can see it's got 66% of stocks are made up of the whole home building stocks versus only 13-14% in the building products. So very, very different makeup between the XHB here and the ITB. And as you can see, the ITB has been significantly outperforming there. So if we go into the individual groups itself, actually before we do that, so we're going to say that you can, another way with ETFs, instead of obviously using the ETF itself, you can make your own ETFs. For someone like me that lives in the UK, we can't trade US ETFs, for example, so have to make up our own version of ETFs. So one way that we can do this with stage analysis is we can look for, say, the 5 to 10 leading stocks in the group, and then buy small positions in each of those. So we've obviously got a reasonably low fee account, something like Interactive Brokers or any other broker that has decent amount of fees, you can obviously make up your own smaller relative strength ranked ETFs. So using the 5 strongest stocks in the group. So for example here, if we look into the group here, so there's 21 stocks in the home building group, for example, here, as you can see. So we can order it by relative strength rankings. So you can see at the moment we've got PHM, Lennar, Hovanian, MTH, DHI, etc. So you could obviously purchase if say you wanted to gather a 10% position in your account, you could obviously do a 2% position in each one of these in order to make your own version of an ETF. And then through the months, you could obviously cycle out as the relative strength changes, depending on what's to get rid of the laggard and move in any new stock that had obviously moved up in the RS rankings. So that's one way you can do it. It can be quite a useful way to get exposure to a group without having to obviously use the entire ETF, which might have a whole load of other stuff in it, like we saw with the XHB, which, as you can see, has got all sorts in it: home retail, home improvement, retail, home furnishings, etc. So might not be exactly what you're looking for. So you can just, by making your own small ETF yourself, you can obviously just track what you like, really. So it can be a decent way of doing it. So let's go into the group itself a bit now. So as I said, ranked by relative strength at the moment, we've got PHM, Pulte Group at the moment. Let me just look at the earnings on some of these. Let me get that back up again. Struggling a little bit here. Sorry, spinning a bit. So we can get the earnings date on this in stock charts. If you scroll down, you can do next earnings. And then you can order by next earnings. So we can see we've got Taylor Morrison with earnings this week, 21st. I think we're moving into the following week then. So only Taylor Morrison this week by the looks of things. So let's go back to the chart list here. So Pulte Group at the moment has been the leader in the group. So as we can see here, since it made a stage 2 breakout. So this week here, 12th of December week, started to move up. It's had a decent run, over 35% to the high. So currently up by about 25% from the stage 2 breakout point. So very steady, right above a rising 10-week moving average there. If we drop down to the daily chart here, you can see the breakout area more clearly. This is your stage 2 breakout area here. Pulled back in initially and then has had a strong run, holding above the 21-day moving average here. We put the free ATR levels on. You can see last week blew out a little bit, got a little bit extended. Looks like that was potentially an earnings gap there on that one. Has come back down again, is now hovering around this 1 ATR level. So the 1 ATR level, for those who haven't watched before, so it's the middle line here is the 21-day moving average, and then this line, each one of these levels in the bands above is 1 ATR, so that's 2 ATR and that's 3 ATR. So the 1 ATR level, when you're in a strong short-term uptrend, tends to hold around there, and pullbacks tend to come into that. So if we get a pullback into the 1 ATR level, and then we see what the Mark Minervini calls tennis ball action, start to get a push back through this kind of area, then that's obviously a pullback potential entry point on these. So there's a lot of these this week in the home builders and in other groups. We've had some constructive pullbacks on lower volume. So that one there is looking interesting this week. Again, although obviously, as we said, a little bit short-term extended. Similar with Lennar here. You can see the similar kind of move, breakout into stage 2. It had been in stage 2 now for a good 3 months there. We look down on the daily chart here, so you can see the move up and out. That was your potential stage 2 breakout, and that one followed through strongly. And you can see it's been running above the 21-day moving average the whole time, with only a few little moves below it. So continuing to be strong. Again, if we put the ATR levels on here, currently in around the 1 ATR level, 85.73, and 1 ATR level is 85.75. So sitting just under it at the moment. So trending higher in the short term still. Set up for a further continuation. You can see a very, very steady stage 2 uptrend in these home builder stocks. And if we look through the group as a whole, we can see for the most part that's been the case throughout. We've only got 3 weeks in stage 2 here for Hovanian, one of the laggards of the group as such, which has now moved up the RS rankings. We're now up to 3rd in the RS rankings overall, with a very strong move 2 weeks ago. So good pullback this week with only a small pullback. So again, put the ATR levels on, you'll be able to see it a little bit clearly. It's pulled back into that 1 ATR level there and rebounded. So we'd be looking for obviously a break up and out back through here for a potential continuation move in that one. Come back in. Similar, MTH also running strongly. Moved out into stage 2, breaking some levels through here. Obviously, you can see the older levels coming through, a little double bottom pattern in this one. So again, steady stage 2 advance, same kind of look to it we're seeing across the board with the group. So running strongly above the 21-day moving averages and pulling back in the short term, back towards the short term moving averages. DHI doing the same. So I won't go through every single one of these in detail, because as you can see, it's very, very similar picture. MTH, MHO here. Similar move, stage 2 breakout there for now 6 weeks. So as you can see, the entire group here, CCS, Lennar, TPH, we're all running in strong stage 2 advances here. I don't think there's only one or two that aren't at the moment. So again, KBH stage 2 for a similar amount of time. MVR, which was strong previously, slowed down a little bit here, a little blown out a little bit in the near term. You can see some volume coming in there. So popped up again, we put the free ATR level on here. You can see it popped up to that free ATR level and has come back in and sitting around the 21-day moving average now. So potentially this one starting to base a little bit sideways here. But yeah, very, very similar look across the board here. There's not really much difference in the group, so it's quite actually difficult in terms of relative strength, as there's so many in the group moving as one. So a good way to, as I said, to do this is to pick your strongest RS stocks in the group and focus on those. As you can see, there's a few laggards here. Beazer Homes struggling to move out into stage 2 here, so only for a week or so, like 3 weeks now, but pulling right back into the breakout level here. So it has come up in the watch list recently as it started to break out into stage 2, but it's pulled back in. There's a bit of a gap down here, so look for this be your secondary entry zone potentially if it starts to push back up through this 15.5 to 16 kind of area. You can use lower time frames on backup entry points, so you can do stage analysis on a 2-hour chart, 1-hour chart, etc. So you can see here we had a strong stage 2 advance, this gap down, obviously a big break into stage 3 and starting to move down into stage 4 on the lower time frame. Should be looking for this to start to firm up, start to pull back above the moving averages base and then break back out again. You can give you potentially secondary entry zones to come back through into. So, and then CHCI is the laggard of the group at the moment, one of the small caps of the group here. So very, very low volume on that, but still attempting to push towards the stage 2 level as well. So very, very strong group at the moment. So we go back to the actual group chart itself. It's moving back into the old stage 3 resistance zone here. As I said, we've got multiple earnings coming up over the course of the next few weeks or so. So you can see here into February and starting into March, and actually some into April as well. So it is quite spread out there, but obviously lots going on in the group, and definitely one of the leading groups in the market at the moment. It's moved up the relative strength rankings recently. It does come off obviously in the last week here, 92.2, so it's in the top 10 still. It's about 9th with a 92, I think, there at the moment in the overall rankings. So very, very strong, but obviously not huge percentage moves from these kind of stocks, but very steady, and obviously a decent area of the market to focus on in that regard. So keep an eye out on the earnings coming up this week. Okay, let's move on to the next part of the video. Why is this not recording? What the fuck?